Room to maneuver is music to his boss's ears, okay? But there is a message to the carry trade market. Don't worry, everybody. I'm still going to preserve a reasonable rate of return. Is that music to your ears?
We've been trading Turkey on headlines for quite a while now. We went from election to re-election every year. We moved to central bank attacks, to geopolitical confrontations across several regions. Yes, President Erdogan wants lower rates, following his theory that lower rates lead to lower inflation. From a fundamental perspective, it makes sense for them to cut rates now. We've got lower inflation headlines, which are led by the base effect because the lira was depreciating same time last year. And if we look at the global picture, now is given that all the Feds turned into the dovish tone, the ECB and the Fed talking about rate cuts and supporting the market, it is time to cut rates. So the question here is, to do it is July and September are the best months to do it. But the question is, by how much? And I think this is why the change...
Zeina, sorry, it's Tracy Alloway over in Hong Kong. I was just about to ask you how much they should actually cut rates by. And do you think there's anything in Erdogan's somewhat unusual theory that rate cuts should help push up inflation? I
mean, yes. Textbook says cutting rates will not help inflation. The flip side of that is by how much. I think specifically this is why the head of the central bank was changed. We think that Erdogan, in his speech on Sunday, was very aggressive in the sense that he wants inflation and rates to drop aggressively by year end. We think this can cause pressure on the lira if it goes too much. So the market was discounting 100 basis points. We think that Erdogan now wants more than that. So this is this would cause a big pressure on the lira.
What does that do to the real rate? If we take, let's say, 100, 150, let's call it a little bit higher than what the consensus is. What does that do to the real rate in terms of the carry trade that people are offering? It's one of the best in the world. Would that still hold or would that dissipate?
We still have a cushion. Even if we do a 1 to 300, we still have a cushion, but that may cause pressure on the lira, which would therefore cause a flip side to a significant sell-off there.
Zeina, it does take a brave shop to trade Turkey at the moment. I know you're in fixed income, but even so, you do have an underweight on the market, though. What would you need to see to shift to an overweight or even a neutral at this point?
Well, we need, from a fundamental perspective, we need to have better visibility on what the central bank would do. And the question that we've been asking for quite a while now is the independence of the central bank. I guess we have an answer now. It's not independent. Rate cuts can come now, but too many rate cuts will cause a potential sell-off to the lira and therefore spill over credit markets. For now, we are sticking to the safe side of the spectrum, which are sovereign sukuks, because they have better technicals and given that there's a yield hunt in the sukuk space. For us to become positive on Turkey, we need more clarity and less surprises and less uncertainties.
Let's shift our attention to Saudi Arabia. We just finished talking about OPEC, and obviously OPEC's fiscal positions and oil, they're all inextricably linked with Saudi and their borrowing. But if we look at, you say, the performance of the kingdom is still 20 to 30 basis points wider than their peers. Absolutely. Do you think that that can compress in a Fed cutting environment with the Iranian situation maybe making progress? Because they battle against one another, don't they?
Absolutely. So basically, if we look at what moves Saudi, oil obviously is the number one factor. Yes. The second factor is geopolitics, which is why Saudi is 20 to 30 basis points wider. The Iran deal would definitely help on this front, but we have other geopolitical factors that are still there also. The other factor that supports Saudi is the index inclusion. It started, it's going to continue till December, so this is going to create demand, it's going to be there. The third factor is you've got to look at Saudi as a significantly high-grade space that offers significant yield pickup versus other regions, especially that we have a significant amount of negatively yielding debt stock, which we're around $11.6 billion.